Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we have a finished three-wave structure to the downside in an ABC 535 zigzag. Wave A is a leading diagonal 1, 2, 3, 4, 5, followed by a three-wave corrective structure in B and another five-wave move to the downside in a wave C. The common target for your wave C is the 1-to-1 trend-based fib extension taken from the start to the end of A to the end of your wave B, as you can see, nicely respected. After wave C, we then want to count impulsive structures to the upside, which looks like this. The first move to the upside is then counted as a wave 1 or A, another leading diagonal because of all the overlap here. Then we have 2 or B, looking for a 3 or C to the upside. The common target for your wave 2 is the blue box between the 0.5 and the 786 Fibonacci taken from the low to the high of wave 1, giving you a target between 60.4K and 59.2K. The common target area for your wave B is between the 382 and the 886, 60.9K to 58.8K. The 382 is an uncommon target for a wave 2, a target nonetheless, and at the moment the 382 is the only fib that is hit, as you can see here, because we just missed out on hitting the 0.5. Now, either in this scenario, your wave 2 or B is finished at the low and you continue up for a wave 3 or a wave C, or we are looking for a bigger three-wave corrective structure to the downside, after which we then want to see continuation to the upside. And that bigger three-wave corrective structure to the downside is then counted as a flat structure, where we have a three-wave corrective structure to the downside in a wave A, a three-wave B, and then a five-wave C to the downside. This is a flat. A regular flat has a wave B common target between the 0.9 and the 105 Fibonacci taken from the start to the end of your wave A. However, the most common flat pattern is an expanding flat, where the target for your wave B is actually just a little bit higher between the 1.236 and the 1.38. 62.9K to 63.2K. So if we do move to the upside, we have to pay attention to this area here. However, in a flat structure, we eventually want to see price move towards the downside, take the low of wave A, which is most common, and then currently the most common target area for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the current high that we have on the chart for a regular flat, giving you a target area between 60.4K and 59.9K. This is in confluence with the box that I have here for some additional support, 60.2K to 60.5K. After this wave C, which then also ends your wave 2 or B, we are looking for a move towards the upside to still take out this high. The probabilities are high that we eventually sooner or later take out this high, also because we touched the 886 taken from the high to the low of this move towards the downside, which therefore significantly decreases the probabilities that this move to the downside is an impulsive wave 1 for then a wave 2 and continuation down in a wave 3. The 886 is a very rare target for a wave 2, common for a wave B or a wave X, which therefore increases the probabilities that any move towards the downside is a wave C or a wave Y, which therefore in turn increases the probabilities to sooner or later take out the highs, either directly or first move down and then eventually take the highs after. The bearish scenario is an impulse to the downside, where we have a double 1-2. Wave 1 here is a diagonal, wave 2 is finished, another one over here, another 2, and then look for continuation to the downside, where 53.5K would be a minimum target. Now in this case, we are then looking for the white wave 2, the common target area on the chart, the 0.5 to the 786. The 0.5 has been touched here, 62.4K 65k to 64.7k, and the 886, very rare target for a wave 2, you don't want to hit that, 65.5k. Now, as explained, the probabilities are low that this over here is the end of a corrective structure, and you're now working on a 1, 2, and a 3 to the downside, because locally price hit the 886. So therefore, in this wave 2, we are also still looking for a bigger corrective structure to the upside, a sideways range, after which in this scenario, we then look for a continuation to the downside. So in this wave 2, what we are then looking for is actually that ABC towards the upside, as shown over here, right? ABC continuation down instead of a 1, 2, and then a wave 3. Looking at the CVD divergences, we have the bigger bullish CVD divergence with the target being the high, but also this bearish CVD divergence. Of course, the probabilities from an Elliott wave point of view are higher to sooner or later take out that high, but we at least have to keep in mind we do have some bearish CVD divergences where the local low here is your target. However, throughout the day, we saw bullish CVD divergences building up also during the live stream earlier today. So higher lows on price here in this range, lower low on the CVD, bullish CVD divergence. Also, when price was testing this resistance here, we had bullish CVD divergences, and now price came down, building some more bullish CVD divergences. We have some news tomorrow, Friday, June 28th, 2:30 p.m. Central European Time. So make sure that you trade safe around that hour, as price might be more volatile. And if we then finally look at the probabilities of the different scenarios, then on this time frame here, the 1 hour time frame, pretty much what I mean is this range, the probabilities are at the moment highest to sooner or later take out this high. On the 15-minute time frame though, and actually even the 3-minute time frame, this recent local structure towards the upside counts more as a 3-wave structure than a clear impulsive structure. Therefore, a flat, as shown, the ABC, has to be considered. However, even after that flat with an A, B, and then a wave C, the probabilities are still higher to then see another leg towards the upside. And I quickly want to show you what I mean on the 3-minute time frame, because what you can see here on the 3-minute time frame is that price moved towards the upside, started ranging, and then moved to the upside once again. But look at the 3-wave structure here towards the upside. So therefore, the probabilities are there for a W, an X, and then a Y, a double zigzag to the upside, ending with a clear 3-wave structure to the upside, and also ending on a high amount of volume. And if we are looking for an impulsive structure, then preferably we see another wave 4 and another wave 5. But price has dipped too far to the downside to now be considered a wave 4. So this is something that we do at least have to keep in mind. Of course, the biggest invalidation for an impulse would be for price to change the market structure and really take out this low. But because of the structure here in the middle and the 3-wavy nature towards price moving towards this high over here, the probabilities are there for that flat. So we have to be prepared for price to possibly move towards the downside, hit support, and then the probabilities remain higher to move to the upside to take out the highs sooner or later, because on the 1 hour time frame, the probabilities are higher to take out this high at some point, either directly or first come down and then move up after. I hope that this video was helpful or valuable to you. Please check out the brand new Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.